Of course, we're talking about a very interesting subject, in fact, a dream of every Indian to go out there and buy their dream home. Well, to talk about this very interesting subject with us is Mr. Roongta, CEO of Apna Paisa. Thanks a ton, Mr. Roongta, for coming by this afternoon to the studios. Mr. Roongta, round the corner is the RBI's monetary policy. There's lots of noise coming in from every quarter that there could be a turn in the rate cycle. Right. So lots of noise about a rate cut, really. Do you think this is a good time for people who are looking to go out there and buy their dream home, to go out there and actually acquire that home and get that home loan if required?
Okay. So I think the key word in that question is home, right? Home means it's a property that you're buying to stay yourself, right? And I don't think that you should time that based on whether prices are going to go up or down, or whether interest rates are going to go up or down. So a right time to buy a home is when you have the money for the down payment and you are in a position to make payment of the EMIs and you made a commitment to a city. You've decided to make a home in a certain city. I think that's the right time to buy a home. You should not try to time it. As far as interest rates are concerned, the only real option today is floating rate loans. Right. So it hardly matters whether you take it now or you take it later, because anyways you are exposed to the vagaries of the interest rate later. So it hardly matters. Of course, the initial interest rate will define your eligibility. Okay. But so to that much extent, I think it has an impact. Otherwise, the interest rate cycle itself should logically have no other impact on your decision to buy a home. One good thing that's happened over the last 6 months or so is because of the action taken by both National Housing Bank and RBI, floating rates have actually become floating. Okay. So as and when we see the interest rate cycle actually turn, we'll hopefully see interest rates go down for existing customers as well. Right.
Mr. Roongta, also, of course, and this is what I picked up from your website, where it said, choose your home first before you choose your lender.
That's right.
Why is this even so important? I mean, you'd normally imagine that if there's an attractive rate, I know that shouldn't be driving you to go out there and buy a home, but why do you say that it's crucial to pick your home before you pick your lender?
So two big reasons. I think first reason is that typically people buy the property, and loan is only a means to the end of buying that property, right? Now, 2/3 of people typically choose an under construction property. Now, you've chosen a particular under construction property that may be acceptable to bank A. It may not be acceptable to bank B. So, there's no point in taking a sanction from bank B without, first finalizing the property, right? That could also happen in resale properties. If it's a very old resale property, it may be acceptable to X bank, it may not be acceptable to Y bank. Second, you get the best rates when your property is finalized, because the bank is sure you're going to take the disbursement now. And the bank reserves the best rate for immediate disbursement cases. So I think because of these two reasons, it's important that you finalize the property first and then decide on your lender.
Right. In that case, Mr. Roongta, how do you decide on that lender? I mean, there are so many banks out there. There's such attractive teaser loans as well, as something that we went through in the last couple of years now. How does one go out there and pick the right lender? Who becomes a good fit when you're looking to buy a home?
So I think first, as we said, decide your property, because that will decide which lenders are part of your consideration set. 2, for some people, the amount of loan is important, in which case you need to talk to 3-4 lenders and find out which bank is willing to give you the amount of loan that you seek, right? Third comes, what shall you say, other charges. Now, other charges can be a big spread. They could be the processing fees. There are banks that charge legal charges separately. There are banks that charge valuation charges. There are banks that charge a stamp duty on creation of the mortgage. You just need to take a tally of that. Fortunately, prepayment charges for floating rate loans are almost on their way out.
Right.
Housing companies like HDFC, LIC, Housing Finance not allowed to charge. Most leading banks have stopped charging.
Right. When you talk about these other charges, Mr. Roongta, what is the sort of range or bandwidth that we talk about here? Because if it's quite a substantial part of decision making, I'm guessing it's quite a substantial part of your cost as well.
So I think one thing is just check that you are not choosing a lender who still has a prepayment charge on a floating rate loan. Very few lenders left. Make sure you are not choosing one of those lenders. 1. 2, there are some lenders who charge a 0.2% fee of the loan amount for creation of the mortgage. Some lenders charge it, some lenders don't. It's not necessarily a bad thing. I think just be aware. It's an actual charge that the lender incurs.
Right.
And probably it makes your loan documentation that much more secure. But just be aware that there is an additional charge in a certain bank which may not be there in another bank.
How do banks compare? So a lot of people, even today actually, are more inclined towards going to a PSU bank, only assuming that it's cheaper, relatively safer and easier to get that loan coming through from a PSU bank. Is that even true on the ground? And of course, you've got younger banks that are out there with more aggressive rates. So how does one decide? Is that even important while making a decision?
So I think let's take each of the factors that you mentioned. Cheaper, I don't think that's true. Okay, I think if you are a good customer, which means that you have enough salary to justify, or enough income to justify the loan, you have a good credit history, right? Your property is all clear. If these three things are true, I think you will get a better deal from a private sector player than you can get in a public sector player. Definitely a comparable deal you will definitely get in terms of both rates and charges. The second thing is safety. So I think when you take a loan, really you don't, beyond the point you don't really care too much who's giving you the loan. Big difference used to be this prepayment charges, and people used to feel, that my floating rate is not actually floating, it just floats up, it never floats down. And that I think is a valid criticism of the industry. With the prepayment charges going away, the chances of that happening has reduced. And I think, so I would go with the bank that gives me the best deal on the rates and charges. Why would I differentiate just because it is a private sector player or a public sector player?
Right, Mr. Roongta, also down payment. I mean, that takes up quite a bit of money as well, right? And a lot of people are actually worried about trying and getting the down payment ready in order to go get that house that they want. How does this play out?
So I think down payment requirements have been steadily increased, and now they are regulatorily governed. For loans above 20 lakhs, the maximum loan you can get is 80% of the agreement value. You have to bear out the stamp duty, the registration from your own pocket, plus 20% of the agreement value, plus any other charges that you might have to incur. So you're talking of the total cost of the property, you're talking close to 25-30% really has to come from your pocket, and only the balance would really be funded by the bank.
And Mr. Roongta as well, I mean, you've said this, right? Leave your home, not your loan, to your children. Right. How important is insurance?
I think it's extremely important. Moment you take such a large liability on your head, your insurance requirements completely change. If you were to die during the tenure of the loan, right, you don't want your family to have to pay off the loan or to have to sell the house to pay off the loan. You want their lifestyle to continue. So you need insurance, not just life insurance, you also need what is called critical illness insurance, which is if there is an illness such as a paralytic stroke or an organ failure, and obviously thank God you survive, the life insurance won't pay, but if you get a lump sum, at least you then don't have to worry about the home loan EMIs. So I think these insurances are important, along with that property insurance is important as well.
We talked about compulsory bundling is what a lot of banks are offering right now. I mean, of course, a lot of first-time home buyers might get carried away.
Right.
Are these products any good while they actually sell that loan to you?
So some of these products are good, some of them are not. I think compulsory bundling is something where you are forced to take the insurance policy from the lender.
Can you actually argue that back? I mean, do you have the discretion of saying that you don't want the insurance but you're okay buying that, getting the loan instead?
Yeah, so I think the point is on paper it is not compulsory, but in practice it is made compulsory. And I think IRDA has also frowned on this in a concept note. I think if the deal is good, you should take insurance. I think that is the point. If the deal is good from the lender, take it from the lender, or just like for the loan you scout around in the market, for insurance also you can scout around in the market and take the insurance. Don't get cornered into taking a deal that's not good.
Right. Mr. Roongta, also, I know this is something a lot of people would probably think about is prepayment penalty. A lot of people might get a lump sum amount where they might want to sort of reduce it, or might have inheritance from their family and possibly might think that repaying their home loan is possibly the best thing to do. How does this work? Is this a factor people should watch out for? Because the penalty can be quite large, right?
Oh, it used to be 2%, 3% of the principal paid plus a service tax on that. But now in recent times, thanks to the action of the regulators, at least on floating rate loans, which is 90-95% of the loans that are outstanding, there is now no prepayment charges. So as far as the housing finance companies are concerned, HDFC Limited or LIC Housing Finance or Diwan Housing Finance, they are regulatorily not allowed to charge prepayment charges on floating rate loans. Most of the leading banks have voluntarily agreed not to charge prepayment charges, whether it is ICICI, whether it is Axis, whether it is SBI. So I think prepayment charges are on their way out.
That's of course advice coming in on the factors that you need to watch out for when you go out there and look for a home loan in order to of course ease that dream of yours of buying your home. Well, lots of factors to watch out for, but the takeaway is that first of all, determine the home before you actually determine the lender, because that's pretty much where you should